Hey everybody, Sive Morten here with the ForexPeaceArmy.com. Let's keep going with the analysis of the Forex market. Mostly we'll take a look at the euro currency, but also take a brief look on the dollar index and the Great British pound, just to understand better what is going on. In fact, currently I would say that the most representative chart is the weekly chart on the dollar index that explains everything. So at first glance on the daily chart on the euro, it's a bit difficult to understand what's really going on. It's a bit choppy action. What will we get? Whether it will be some pullback here, or maybe market will keep going higher to the next target. What's happening? So first of all, by looking at the fundamental picture, we should acknowledge that currently it seems that big repricing of the Fed results now stands on the way. Yesterday we already put in our Telegram channel the update from the Standard Chartered Bank, who suggests that this will be a 50 base point cut instead of 25. Barclays is also changing its view on the Fed policy in a midterm perspective. And if you take a look at the performance of the 10-year bonds, you could see what is happening. So market stands in a nosedive, and it's very actively is moving to the 4% level. Yes, you could say that it's logical for 25, for even particular precisely 25 base point change. But it's not quite simple. It's just because this is not the 10-year bills. This is not the 3-month, 6-month bills. This is 10-year bonds. And it has a bit different relation. It doesn't depend directly with a one by one with the basis point change of the Fed rate. So, and here as you can see, the drop not just 25 points, it is bigger. So starting from the 4.3, and I would say even 4.35, it definitely indicates that market is pricing in 50 basis point cut. This is my opinion, especially if you will see this kind of action. Now, as I promised, dollar index. Dollar index on the weekly chart explains everything. Here's actually what we have and why I think that the euro currency should keep going higher, approximately to an area 119.20, 119.40. On the dollar index, we have big ABCD pattern that has not been completed yet, with a target around 95 even. On the euro currency on the monthly chart, you also could see the same ABCD pattern with the target above the 119. Right now, at the bottom of this big pattern, dollar index is forming accurate 3-drive buy pattern. So we have first drive, pullback, second drive, pullback, now it's third drive. The target of the third drive stands precisely the same area, more or less precisely, it's 95.50, because it's weekly chart, it can't be just perfect coincidence. So this pattern probably will be complete, and then started the reaction or retracement on all markets. So that's why in the current circumstances, the third drive already started. Technical picture stands in favor of the further drop of the dollar. Correspondingly, it stands in favor of the further rising of the euro currency. Second conclusion that we could make here is that as a third drive already started, so retracement stands in the past, so major retracement stands in the past. Market could show the pullbacks inside of this most stressing swing, but retracement should not be too deep, so it should be small. Whatever target market will reach. We are based our opinion on a suggestion that this pattern will work. So that's the core, what stands really in the background. Now let's return back to the euro currency. On the euro currency, here is a bit tricky moment with this, let's call it as a hand and shoulders or something like this. Because here is not quite clear whether we already have the shoulder or we will have something like this, horizon neck, right here where market is coming to, and we still will get another retracement back to the 15, I don't know, somewhere 1550, maybe slightly higher, as the market will form the right arm and then keep going to the upside. Well, in the current circumstance, based on the performance that we see on a dollar index on the 10-year bonds, I would say that this scenario is a tail scenario. We can't exclude it totally. Theoretically, it is possible, especially because it doesn't break the overall bullish context. It doesn't break the overall pattern that we're considering. although it makes for us actually brings some problems for trading on intraday charts. But in general, it doesn't break anything, and theoretically we could suggest it. But with the current circumstances, as I said, it's probably less probable scenario, some kind of detailed scenario. The basic scenario, I suppose, that here is we could get the pullback, but it should stay somewhere inside of this range. Some minor respect to the COP target, and then upper continuation to the OP. In other reasons why I think so. So if you take a look at the Great British Pound, you just could take a look on the performance. So first of all, take a look at the hand and shoulders. It's a bit curious shape. It was a bit touted by lots of important and really stunning numbers that have been released previously. Here's jump, here's collapse previously. But you can see that all this stuff has been erased with a straightforward upward direction. This suggests strength, or better to say, maybe not the strength in a cable, but weakness in the dollar. And that the processes that I'm just explained now stands on the way. On other charts, you also could see the same things. So here's actually not very representative, but on a weekly chart, take a look what is going on. Market trend shows on the bearish direction, but here's market is not bearish. It suggests for the upward direction. So here's might be some kind of the butterfly to be formed to the upside. It also stands in the same way as on the dollar index, as on the 10-year bonds, euro currency. That makes me think that more probable that we will not get big deep retracement out of this target. So that's the conclusion that we could make here. Now if we turn down to the lower time frames, you can see that our trading plan that we prepared on the weekend works perfectly. Market almost completed the targets that we have specified. As we said, nearest ending target is 117.88, 117.90. This is butterfly extension, this is COP target, and upper border of this channel. Now, what could happen? Probably we could watch for some retracement here, but as I said, it should not be too deep. And from that standpoint of view, I would consider some pullback, maybe to 117 area, or maybe slightly even higher, based on the fib levels on intraday charts that we have. On the hourly chart, you could see what has happened with our bread and butter trade. Started perfect, precisely at the point that we have specified as was confidence support, if you remember. And as we said, as we promised, that take a look, very probable, since we have target around 1790, the butterfly will, as the bread and butter, will become not just the pattern to its minimum target that was right here, 618 resistance of the whole downward direction, but it might be the starting point for the further upward direction right to the target. It might become the trigger, and it has become the trigger, as you can see. Now its target has been completed. So what we should do currently here, first of all, take a look at some maybe downside reaction out from this target, and take a look at this shape. So if we will see that it might be kind of the hand and shoulders, all right, so market drop here. In this case, maybe we could get a bit deeper retracement, somewhere down to the 1650. It is possible in current circumstances, although I think that it should not happen, and more probable that we will see some pullback inside of this range, not very big, and then market could continue to the upside. So that in towards what we have. If you still hold your position based on this bread and butter trade, we suggest you to take some profit, at least partial. If you do not want to close it, book the profit in some part, 35%, 40%, and other you could keep the rest for the further upward action if you would like to. So that's actually what we have currently on the market. As a bottom line, overall context remains bullish. Signs on other markets, cross-market analysis shows that investors are pricing in greater rate cut from the Fed currently, which makes us think that chances on a deep retracement stands low, so most probably it will be a relatively small retracement, and market is going to completion of the major weekly targets, as in the dollar index, as on the euro currency.